Adobe, the software giant, recently reported impressive earnings, surpassing both top and bottom-line estimates. However, despite the stellar performance, the stock witnessed a dip of around 5 to 6%. This may have left investors scratching their heads, especially considering the remarkable 85% year-to-date surge in stock value. Looking closer at Adobe's financial metrics, it appears that the company is currently trading at a premium compared to its close to 10-year mean. Multiples such as PE, EV to EBITDA, price to sales, and price to free cash flow indicate that Adobe might be more expensive than historical averages. Examining the share's value over time, it's noteworthy that the number of outstanding shares has decreased over the last decade. On the positive side, free cash flow per share has seen a consistent increase. These trends contribute to the company's strong financial position and could be a factor in its robust stock performance. Earnings growth is a critical aspect for investors, and Adobe seems to be on a positive trajectory with an estimated EPS growth rate of close to 16% for the next 5 years. This forward-looking metric provides optimism about the company's future profitability. However, not all is smooth sailing for Adobe. Regulatory scrutiny has emerged as a potential cause for concern. U.S. regulators, with the Federal Trade Commission, FTC, at the forefront, are investigating Adobe's cancellation rules. This regulatory attention could introduce uncertainties into the company's operations, and investors will likely closely monitor the developments in this investigation. Adding to the regulatory challenges, Adobe's strategic move to acquire Figma is also under scrutiny. The European Commission, UK Competition and Markets Authority, and the US Department of Justice are conducting reviews, and preliminary findings and objections have already been issued. The outcome of these regulatory processes could significantly impact Adobe's future business strategies and market standing. Digging into Adobe's Q4 fiscal year 2023 numbers, the company reported quarterly revenue of $5 billion, with GAAP EPS at $3.23 and non-GAAP EPS at $4.27. The fiscal year 2023 revenue stood at $19.41 billion, reflecting a robust 10% year-over-year growth. While these numbers are impressive, the market reaction was less enthusiastic, possibly due to expectations not being met. Looking ahead to fiscal year 2024, Adobe has set ambitious targets. The company expects total revenue to range between $21.30 to $21.50 billion, indicating continued growth. Digital Media net new annualized recurring revenue, AR, is projected to be around $1.9 billion. Various segment revenues and earnings per share estimates have also been provided. However, the fiscal year 2024 outlook appears to be a bit weaker than what the market anticipated. Segment highlights showcase Adobe's strength in key areas, such as the Creative Cloud and Digital Media AR numbers, Document Cloud revenue, and significant enterprise customer wins in various segments. The geographical revenue distribution provides insights into the company's global footprint, with 61% of revenue coming from the Americas, 14% from Asia, and 25% from EMEA, Europe, Middle East, Asia. Financial metrics further emphasize Adobe's solid position. The remaining performance obligation, RPO, stands at a substantial $17.22 billion, indicating a robust pipeline of committed revenue. In terms of liquidity, Adobe holds $7.84 billion in cash and short-term investments, and the cash flow from operations for the last reported period was $1.6 billion. Additionally, the company repurchased approximately 1.8 million shares in Q4, signaling confidence in its own valuation. Taking a technical analysis approach, the stock is currently teetering close to being overbought. The 200-day moving average, a key indicator for trend analysis, sits at $500. This technical perspective suggests that caution might be warranted, as an overbought condition could potentially lead to a correction in the stock price. In conclusion, Adobe is undeniably executing well, as evidenced by its robust financial performance and strategic moves. The stock's impressive 85% year-to-date gain underscores investor confidence in the company's trajectory. However, the fiscal year 2024 outlook, though positive, fell short of market expectations, leading to a slight decline in stock value. Despite these achievements, uncertainties loom on the horizon. The regulatory investigation by the FTC into Adobe's cancellation rules introduces an element of unpredictability. The Figma acquisition, while strategically promising, faces hurdles with ongoing reviews by regulatory bodies. The market's reaction to the outcome of these investigations will likely be a key factor influencing Adobe's future stock performance. As investors navigate the landscape of Adobe's financial landscape, they must weigh the company's strong fundamentals against the regulatory challenges and market uncertainties. Adobe, with its history of innovation and market leadership, remains a solid, heavy compounder for the future. However, the path forward may not be without bumps, and stakeholders should remain vigilant in monitoring the evolving dynamics that could impact the company's trajectory. Please consider liking, subscribing, and sharing with friends to support our content. The information is for general purposes. Viewers should conduct research and consult professionals for financial decisions.